So in 2023, you joined us as co-founder and CEO of Tribe Capital, a venture capital platform with 1.9 billion USD under management, investing in early stage and late stage, as well as crypto. And notable investments you've done at that point in time were Kraken, one of the leading crypto exchanges, where you since 2024 moved from Kraken's board, now being the co-CEO. Before we dive into the role of you now being the Kraken CEO, I'll just finish up your investor track record. So you also invested in companies like Consensus, but also traditional, very successful ventures like Carter, Airtable, OpenAI. And before Tribe, you were a partner at Social Capital with investments in Slack or Swarm, which was sold to SpaceX. And that's not all. You were also recognized as one of the top 100 angels in Silicon Valley with investments in Lyft, Snapchat, and OpenDoor. So now coming to your current role as co-CEO, can you share with the audience how this transition came about?
Sure. So today, I actually operate a number of things. Co-CEO Kraken is basically my full-time job. Chairman and co-founder at Tribe Capital, but I still have a pretty large foot in the door there in terms of how I make investment decisions. And then I run a bank in Mexico called Capital, where we just recently became a top 10 bank by acquiring two banks over a period of time, but also based off of our infrastructure that we use in order to scale the bank itself. I came on a little bit early, so I heard the last two pitches around some of the swaps and the products, and it's really cool. And so I actually think like that's probably the single most proud thing I've done is like start companies from that stage and get customers from 1 to 10, 10 to 100 to 1,000 in some cases, and that's part of the framework. I think the way to think about what I do and how I spend my time on is everything's actually rooted in a system we call product market fit. We've quantified it, and we think of it as a living system. And most people think of product market fit as a moment. And so if you think of it as a loop, you build, you measure truth, and then you evolve, no matter what the product is that you're building, then you can sort of use that as a framework no matter what you do. And that system that I'm describing today is actually a software system called Termina that we use. And it measures a loop across thousands of companies, not vanity metrics, but examining exactly how to value the flows of a network. And it gives me a pretty quantitative lens for conviction, regardless of how I spend my time on that conviction. Either I'm running the company, in this case Kraken, or I'm investing in the company or partnering with them. And so that's why some of our startups have, over a period of time, as I'd mentioned before, product market fit is a living system. They start exploding, not because they just had one event, but because there was product market fit and it was compounding over the long haul. And so when you measure that year after year, that mindset, I think, becomes like very important. And frankly, that's all I do across all of the companies I work with or I build at. So at Kraken specifically, that's the same mindset. Every product, every business line is tested through that PMF loop. And it's serving real product market pull. And so that feedback loop, because we're in crypto and in some cases, you can say very much so financial services, the feedback loop is short enough, and I can continue to ask the question, are we compounding engagement or chasing noise?
And what triggered the decision to then move to the CEO position at Kraken?
I met Jesse and Ton, who were the two co-founders, roughly 10 plus years ago. I'd invested my own capital. At the time, it was a company called Payword Inc., and the name Kraken was just a placeholder. And I've just known them. And the first interaction I had with them was them asking me to come on as an independent board member. And then from there, I had started making my own investments into the company, and then Tribe made the investments. And given that I was so focused in financial services and fintech, wave 1.0, wave 2.0, wave 3.0, they just had asked me, can I replicate that same framework and thinking into Kraken itself, and actually think of it as like a living startup where what I wanted to build, could I build it there while also running the company? At first I said no, because as a VC, I had already retired, and I wasn't planning on running a company anymore. And frankly, I was actually a little scared because over the last 10 years, I've gone from a pattern of thinking about searching for the truth as an investor. And I had already searched for the truth as a founder, but as an operator for a company that already exists, that framework is very different. And so, Jesse, who's the co-founder, that's a little bit more upfront and center in terms of notoriety. He was just very, very pushy. And so he built a framework around how to think about calling what I could do at Kraken as an Elon grant, and using that framework for milestones that he thought AI could achieve, but could be so far out, but would be enticing and incentivizing for me. He just kept pushing, and then he said, you can work at Tribe at the same time. You can keep working at your other companies, but could you make Kraken your first and foremost? And eventually, I relented and I joined.
That's amazing. Just for the audience, I mean, you have a feeling of what type of audience we have here. So mainly investors. Can you kind of share a few numbers about Kraken? Where does Kraken stand today? What kind of what do you offer to the audience, and what is kind of the magnitude of Kraken today?
Sure. So today we operate in about 160 plus countries and jurisdictions. Last year we had clocked just under 1.5 billion in revenue across all these regions. About 65 to 70% of our revenue is actually outside the United States. We are a private company. We are available in US, Canada, Australia, UK, Europe, including EEA. So it's passported there. We're MiCA compliant. We serve actually just roughly over 12 million clients. It's actually not that much in comparison to some of the other constituents that you have in the ecosystem. And I think the way to think about it is that we offer multiple products, multiple venues to be able to access those products. So Kraken isn't just one product. We offer products for our consumers. We offer products for enterprises through our solutions, and same for our professional traders. But the history of Kraken has been through our professional traders, where we offered spot trading, futures, staking, institutional custody, and we continue to sort of scale those businesses as well as other prime businesses. But we also now do equities, tokenized equities, in addition to that.
And now if you look back on your kind of first year at Kraken, what has changed during that time? And especially that the past year has been one of the most positives in the industry.
Look, I think that when a company has product market fit, it just has product market fit, and it's up to you to decide where you can take it. And so when I took a look at Kraken, I think if you boil everything down in crypto, and the previous folks that were on, again, as I was listening, I think they gave a fairly articulate vision as well, is that you take a step back, right? And the goal to make Kraken the most product market fit institution in finance, that means that every product line, from custody to staking to tokenization, runs on a very clear feedback loop of a customer signal, whether that's like regulatory clarity, capital efficiency. And so a lot of things have changed and a lot of things have not changed. So what I mean by that is, in the United States, there's a focus that like things have changed, but Europe was the first to pass MiCA, to figure out how to design it. Now they've gone into implementation mode, and people are adapting to what does that actually look like. That basically means, for one of the first times, Europe was first to recognize crypto rails and building technology on top of that. That's actually where we were the strongest, was Europe first, US second. And a lot of what I think was really important is that if you build an organization that matters and measures truth before you scale, that's how you build something that can last 100 years, not just like a hype cycle economy or company. And a lot of what we do at Kraken over the last year has been, okay, great, where are those regions? Where do our customers exist? What do they want? What do they need access to? And how do we build against that? And what was great was since last year, obviously the US now is catching up as quickly as possible. In some cases, trying to leapfrog in certain areas as they do. Post World War II, it's kind of their history. You can see that there's been a lot of reinforcing themes around what crypto means for the US dollar, what it means for crypto, what it means for assets across multiple jurisdictions. But at the most, what I'd say, optional bridge is how do you think about collateral and risk management, and then what do you do with it? And is that multiple products, multiple institutions, et cetera? And so a lot of where I've been spending my time with my teams is, again, as a pattern matching individual, as a founder, you search for the truth and what are the products that you build. As an investor, you recognize the truth and you invest in it. And as an operator, you scale that truth. And for us at Kraken, what's probably been the most exciting is that we have so many truths in front of us. Now we're just trying to scale them all out. And when you just think about the size and the scale of what you can scale, it ends up being, you start thinking in the trillions in terms of the value that you can unlock on behalf of your customers.
You've been a founder, you've been an investor, and now you're a founder again. So what kind of learnings are you taking from that experience? And is there like one thing you can pin down you're most proud of now achieving with Kraken in the last year?
Look, I think that I'll take a step back. So my whole career has been about running the same experiment from different angles. And so like, what does that actually even mean? Like, Arjun, what are you talking about? So again, as a founder, as I mentioned before, you learn what reality feels like. So the constraint of time, the urgency of product, the emotional cost of getting to product market fit. It is a hard journey. As an investor, you just learn to see the patterns, right? You guys are, a lot of you around the table or in the room are investors as well. And so that you're always trying to search, ideally, what truth looks like in the data before the world recognizes it. That's why you're early, inherently early. As an operator, again, you learn how to scale that truth, as I've mentioned, how to turn that insight into institution. The biggest learning in all three of these roles are the same discipline at different resolutions, in my opinion. That's how I run my, what I call, truth-seeking system. You're constantly asking what's real, what's noise, how do we compound what's working? And if you ask me what I'm the most proud of, is I'm just proud of sticking to exactly that, which is how do I make sure I stay, how do I, from my founder mentality mode, that I have humility and that the world doesn't care about my plan. As an investor into the company, because at Kraken, I'm teaching myself again the discipline. I got to wait for the signal and ignore the noise that I see every single day, regardless of if that is a reporter or another investor. Everyone's paying attention, but there's a lot of things that just don't work and you have to learn how to say no. And then again, as an operator, you have to be taught constantly how to endure. So I use the word endurance a lot. And so it's like to hold the line once I find the signal and then just keep synthesizing and keep pushing. And so if you think about compound finance, et cetera, I think it's really important to use that type of framework when you're thinking about running a company. And a lot of people forget sometimes the small things really matter. For example, we use this term, I just want something to grow at 3% week over week, which sounds very small. Well, that's a 5x growth at the end of the year. And regardless of size, it's 5x. And if you keep trying to figure out where you can compound, where you can grow super linearly, again, it's a mathematical function. Then you start building things that last and endure for the long haul. So that's what I'm the most proud of, is just making sure I've found the truth and reduce as much noise as possible in order for the teams to focus on what matters at Kraken. And I think over the last year or two, you'd have to be the judge of if we've been able to do that or not, especially in Germany itself.
And now you're planning the IPO. So Why make this step now and not earlier? And how did this decision come together internally?
So the decision internally at Kraken to sort of scale this out in terms of this framework was more of a terminal velocity of where we wanted to go. And so what I mean by that is, what do we want to be as a company to our customers? So the first and foremost, the people that matter the most at Kraken are our clients and our customers, depending on the segmentation. But we started off as clients because we were professional traders. We never used to hold their assets. We never used to do anything until we started getting into custody. Now, what happens is counterparty risk is the biggest, I think, trust venue that people care about. Are you regulated or are you not? Are you complying? How do you hold my assets? Do you have proof of reserves? Where are those sitting? Et cetera, et cetera. So a lot of the ethos of Kraken has been building out that security, trust, sovereignty in some cases, and that's what we had endured to build out. And that means that you disclose yourself like a public company. You show your counterparty risks like a public company, and that's why you talk about disclosures. And so a lot of our large, medium enterprise / large enterprise style customers, which you would call institutional, they really care about those types of signals. And so we have not announced in any capacity that we're looking to go public, but we show ourselves like a public company because we give quarterly reports on our proof of reserves and our revenue. So if you just type in Kraken financials, we do it every quarter. And so we don't have to do that. And a lot of the reason why we do that is to just show that as a company, you can trust us as a customer with your assets, if it's flowing in and out or if you're custodying there.
Right. And so what do you think? Will there still be some changes after an IPO for Kraken? Or what do you think would change then being a publicly listed company and being a company active in the crypto space?
Yeah, it's hard to say because we haven't made any comments on if we're going to go public or not. So I'd actually say that, look, we're private, we're large. We have today over 1.7 billion on the balance sheet, including crypto and fiat. So we don't need to. And again, a lot of what we do is we act like a public company. Doesn't necessarily mean we will be a public company.
And now let's talk a little bit more about the future of exchanges, the future of finance. We've been discussing this a lot today in several panels and from several angles. But we're seeing a strong trend toward trading and asset issuance moving on-chain. What do you think is driving this shift, and also how Kraken does position itself in that shift?
Sure. So I think what's important is a lot of people, and by the way, the audience might be much smarter than me, but I think the way to think about it is there is right now a line between centralized and decentralized finance. However, that is dissolving very quickly, and I think that's a very good thing. So DeFi, I think, has proved what's possible. And then we call CeFi, so centralized finances, I believe proves what is reliable. This is how we think of ourselves and the view of what's happening at not just at Kraken, but in the ecosystem. The future isn't one winning over the other. I believe it's a fusion of both. And the reason why that matters is that you care about trust. So when I think about exchanges in terms of product market fit, DeFi found fit with transparency and programmability, and in some cases, composability. CeFi found fit with trust, compliance, and access to fiat. So what you're seeing now, especially with equities, treasuries, credit moving on chain in these two loops, you're seeing a lot of convergence. So the customer, if you really ask the customer, what do they care about? They don't care if the rails are centralized or decentralized. I think that's really important. They just want it to work. But they do care if the settlement is instant, transparent, and composable. And so the way in which we think about the world and how we've been building, so we contribute to not just one layer twos, but a bunch of layer twos. We are an exchange at the end of the day, so we obviously support them and the token ecosystem. So the role is to be, for us, the access layer and the bridge between the regulated world and the permissionless world. We're building towards a model where users can trade, let's call it tokenized securities, crypto assets, real world assets in the same interface, backed by the same compliance guarantee. depending on what jurisdiction you are. It's either a CeFi infrastructure, but then you definitely want DeFi interoperability. I liken it to, the internet has lots of protocols that you could use. A lot of people don't use it. And your interface into accessing the internet in a decentralized way is, product by product, institution by institution, and you trust or you do not trust that product. In some sense, what's happening on-chain equities is also the biggest product market fit event in finance in decades. It's not just moving stocks to a new database. It's actually building the financial stack bottoms up. It's self-open. It's verifiable. I think that's a game changer as you think about collateral. And so it's that same leap that when you saw the internet turn private networks into a single public one, I think in the same way is from a systems perspective, we're moving from brokerages as an endpoint or middlemen to markets as protocols. That's really, really profound. And the exchanges that will win, or the companies or products or the protocols that will win, are going to be able to offer both. And what does that mean? Security, regulatory clarity on CeFi, and then the composability and transparency of DeFi. And how do you build against that?
And how do you see Kraken positioning itself? Also, we talked about, for example, the future of banking today, where, of course, there are several services which being offered also from a banking side or traditional exchange side. Do you see that there are more overlapping partnerships, or how do you see Kraken's positioning in the future in that sense?
So for Kraken, we're an exchange at the end of the day. So I think the way to tie all of this together again is what's exciting for everyone there, including companies that you invest into, that I invest into, is that the definition of the financial institution is in the process of being rewritten. Everything that we were used to on a post-World War II world that we've been used to is changing and are at a more rapid rate because of decentralized infrastructure that we don't have to rely on, but on the transparency, again, and the composability and programmability of what we believe can be in the future. So 10 years ago, exchanges traded crypto. That's it. Banks held fiat. Asset managers issued funds. Now those roles are all converging around shared infrastructure. So the blockchain is what I'd call the neutral layer of trust. That's actually pretty profound, right? It's not like one versus the other. And the way in which we've converged there and at Kraken is we already operate a bank in Wyoming. So we think of ourselves as a trading venue. We think of ourselves as a crypto native financial platform. We think of ourselves as custody, payments, staking, tokenization, and liquidity all integrated into one fabric. So when I look forward, these three layers overlap between exchanges and banks or other financial products or institutions. So what did I mention before? Custody and trust. So traditional banks are waking up to the fact that holding tokenized assets isn't a side business. It is the business moving forward. And so they're all trying to figure out what to do, right? Like if you go to any board meeting, I just met with a very large institution this morning, right before this chat. And they were scratching their heads and saying, how do I lend against crypto collateral? Like, how do I just do it? So I do think we're in this internet moment, which is like, where are they on the .com phase? And are they building infrastructure? Are they building actual products native to the internet? So in this instance, native to crypto, or are they just trying to figure out how to just use the word crypto and then try to be like intent on that from a quarter by quarter basis with their shareholders? The other aspect I think that's really different is market infrastructures, equities, bonds, treasuries, all moving on chain. That's not changing. Trading venues and settlement layers are collapsing into one digital substrate. And so the question ends up being, how do they collapse? And so the way, again, we think about it at Kraken is, can you do as much of this to settle on chain in real time? That's where you can collaborate with banks and not compete with them in some cases. But you may have to be a bank in some specific areas, again, as we are. So we've got the SPDI layer in Delaware, but that doesn't mean we may not be a bank in the UK. It doesn't mean we may not be a bank in Europe, because I think when it comes to regulatory and trust, you got to be able to figure out how to converge the two. And that might mean that DeFi and crypto native companies coming back in a traditional way and saying, okay, great, here's how to rewrite the rules of the way to run a bank in some cases with new rails. Because a bank at the end of the day is just a trust mechanism written by contract law and regulated by governments to adhere to that law. And I think a lot of people kind of forget about that. And so when you think about distribution and access now, today banks have customer relationships, and that's changed a lot when you think about neobanking, et cetera. But exchanges and even DeFi protocols, they have what? They've got liquidity and they've got technology at a global scale with global distribution. So that means you see overlapping partnerships where the power of crypto and tokenized asset layers are going to have to be behind regulated financial products, and they're going to have to support regulated financial products in some cases, because that's what's going to happen. The same way in which you would think about, AWS and has done for compute and what's that infrastructure layer. So some companies will be direct to consumer, and I think some companies will be infrastructure. We do both because we don't have a choice, and that's how we've grown up. So we're an exchange, we're infrastructure, API layer, we're SDKs. We support other neobanks that want to be able to have sending and receiving, buying, staking, and earning and crypto. And we're doing the same thing with large institutions. We actually work with other crypto native companies where their interface and wrapper is just plugging into our technology and liquidity, but they have a very specific customer set that they serve, right? So you have to partner, you have to be, and so I think the key idea here that you'll keep hearing from people is that the financial internet is coming. And so the question ends up being, are you both code and compliance? Are you a trusted bridge, or are you one or the other?
Yeah, because you mentioned regulatory environment quite a lot, I think it's worthwhile diving in a little deeper there, especially because I remember a discussion we had a few years back, just before Trump got elected, and you were very helpful in that process of designing regulation in the US, if I remember correctly. Can you share some experience how that was in putting the US back on the map? We discussed today that maybe Europe was first from a regulatory point, but the US is very strong in, once they design regulatory incentives, that they act super quick and then scale. Can you share a little bit about that experience, how you helped shape the regulatory environment also in the US?
Sure. So what's interesting is that we were invited to the table at the UK, so Downing Street. And then we talked to a lot of the European regulators. And I would say, like, look, there's a narrative that Europeans aren't innovative. And in some places, I agree with that. And that, the Europeans regulate first, innovate second. But in this case, I would say that, like, we were spending all of our time in Europe. We were spending all of our time in Brussels. And a lot of it was a few years ago, before the White House administration or the United States. You had a lot of the member states, given that we were regulated there. So between Ireland, Cyprus, and Germany specifically, France, etc. We had the opportunity to sit down with those policymakers and regulators to think through what was responsible, who was responsible, and how to think about crypto regulation. Who wrote the MiCA compliance papers, et cetera, and what that would look like. So we weren't being told what to do. They were asking, okay, how does this work? And how can we make actually companies like Kraken successful within Europe? And so our job wasn't to lobby for leniency. It was to help design the frameworks that made sense for both innovation and consumer protection. So the core ideas that we had actually discussed in Europe at the time is regulation should measure risk, not form. That was the question. It should matter whether an asset is on a blockchain or in a database. It shouldn't matter. And so when you think about what's been happening now all over the world, it's actually based off of MiCA. And so you'll actually hear me talk about it again and again, because we actually refer what happens in MiCA. Even here in the United States, as we're designing market structure here, we say, here's how MiCA has done it. Here's what they actually do. And here's why we think it works really well. And so the question that was always asked is, does crypto create systemic risk, or does it expand access and transparency? That's where I believe the people kind of turned over a period of time, where it's like, okay, maybe this is our opportunity to lead when done right, where regulation now for the first time ever could become a design tool, not a constraint. So you could build a cleaner system, a cheaper system, a better custody system, a more durable incentive. And so that's how Kraken has built that culture. And so if you go to kraken.com/culture, you can see how we define compliance not as a department, but a product feature. And we designed our organization to trust scale with that type of innovation. And again, we are actually one of the few global exchanges that's fully regulated in the US, in the UK, in the EU, and the EU through MiCA. And we didn't get there by avoiding the regulation. We just got there step by step by helping them educate, and then say, okay, this is what makes sense or what might not make sense. When you go from design to implementation, you'll realize that implementation is hard too. And so you go back and say, hey, by the way, this implementation may or may not make sense for DeFi. It may not make sense for regular CeFi, which is why I think, the European regulators have been really great at helping us also innovate new products. Tokenized equities, the first place in the world where we launched tokenized equities, where it's a permissionless token that you can put onto your phone on any device, on any wallet that we empower, happened in Europe. And the European regulators said, you should do it. We're excited about it. And here are the ways in which you can roll it out. And here's the rule book that we can start building around what you do with tokenized equities, knowing that we want to go into a full phase, not convergence of that asset, but having it all on chain. So I'd say like the same thing is happening in the United States, same thing is happening in Asia, where regulatory certainty, helping them educate around why it's going to be great for customers themselves, how it empowers individuals to be free with their own assets. And more importantly, it's a forward mobility tool that they didn't have access to before, given the compression and consolidation of what's happened in traditional financial markets.
Now, thanks for those insights. And from what you've seen with Tribe and also the verticals you look at, which ones are the verticals you're most excited about if you think about the future of Web3? And how does that also align to the strategy of Kraken, where you potentially position yourself?
So if I wear my VC hat, everything's exciting. Look, I think one of the areas that probably I'm the most excited about is you just look at technology through one lens, which I remember I gave you that framework. We have a framework for thinking about product market fit. That's been our true north since the beginning. So what that means is if it's enterprise software or early days of fintech or healthcare, now people talk about crypto and AI, but crypto and AI to me is not an asset class or a subsection. It is a weave into everyday life, depending on what the application is. So the way I think about it is where are new markets forming faster than the old ones can adopt, or even adapt to in some cases. So again, I say Europe a lot, and I don't mean to say Europe is cool because I'm talking to mostly probably a European audience. It's that for so long, Europe has been stagnating in terms of innovation, acceleration, GDP per capita, and GDP overall. We all know that. It's not like it's a secret. But when you create these new systems, you can have them accelerate at a fast pace if allowed to. And so I think the reason we talk about Web3 or crypto or how they work in the broader economy, I think of these types of things, which is financial primitives on chain. What do they do in these markets for tokenized treasuries, for real world assets, for credit systems that live natively on the public infrastructure or public chain? And finance finding its product market fit for the internet is like, it's unbounded. I don't even know how to compute it because it's just going to be so large. Now you add AI plus crypto, as I meant the weave, these incentive networks for intelligence, data marketplaces, verifiable computation. The next generation of machine learning models will not be economic alignment. It's going to be an incentive layer alignment. That's where I like investing into companies like OpenAI or XAI or Applied Intuition. It's all part of the same logical arc, and it is a long arc of intelligence and coordination merging, regardless if it's open source or closed source, DeFi or centralized. So you have a lot of these infrastructure and governance systems that are being pulled together very quickly. I'm super, super excited about how fast crypto moves again, or blockchain or Web3 moves, because what does decentralized compute look like? We all suffered Amazon being taken down last week, where it's a 9-hour delay for my flight because they're working on the Amazon system. We don't need that. It's the same problem that you have in traditional finance, which is like, why wait for something that's not working? You want it instantly. You want it to be yours. And so I think a lot of the common thread is that a lot of this infrastructure layer is continuing to be more invisible, but it has to work. And the best products, in my opinion, are not going to call themselves Web3 or Web2, et cetera. They'll just be faster, cheaper, and more transparent. I know that sounds basic, but that's the business that we're in. And then it gets much more evenly distributed across the world. And so when I think about my hat with Kraken or Tribe or Capital, it doesn't matter, is again, as an exchange, you're not just a trading venue, you're an on-ramp to the whole digital, entire digital economy, whether that is tokenized assets or collateral, yield products, payments, governance assets, will be trusted and then be thrusted into that interface that connects people to that future. So the future of Web3 for me isn't speculation. It's everything, right? Like that we do on a daily basis. So again, finding signal, measure that truth, and then I'm just going to keep compounding what works.
And now when we look at, we've all done the investments on the equity side, but of course there are many businesses where tokens are part of the game, right? Token economic design, and part of that exit route is also the token issuance. So how do you see that process of founders launching a token has changed from an investor's and from Kraken's perspective?
So what you're really talking about is capital markets and investing at the early stage and having some sort of liquidity. What's most important for founders, entrepreneurs that are building products, again, in my opinion, is that you have to think about tokens through the lens, again, of capital markets math, not hype. So if you strip it down, a token is just a balance sheet in motion. So it represents what? It represents ownership. It represents incentive. It represents distribution, all compressed into a programmable unit. Right? So a programmable unit of a cap table in some cases. So when you model it that way, the math is very clear. Equity captures ownership. Debt captures time and risk. Token captures participation, regardless of who that is, community versus an investor versus contributors. It's the same thing in the way in which you think about a traditional private to a public company. So the dynamic flow of contribution, usage, and governance is in real time, but that's changed in many ways. So when people think about the exit route, might that be a token issuance? What we really mean is value discovery happens differently, but now it's more continuous. It's not at an IPO moment. It's not just one moment. It's multiple moments that happens through the organization's life. So, and that's going to change, by the way. Like the way in which we see it now is already sort of, the conversations are happening in terms of, hey, this is inflationary, this is deflationary, this is not incentivizing, et cetera. The same way that there's no rules written into law around how you think about, or into securities law, the way in which you think about what is the cap table, who owns what. It is a market-driven governance structure, and I think the same thing will happen in the tokenization markets, because I don't think of tokenization any different than traditional capital markets. And why is that the case? Tokenization is going to continue to let capital markets operate like living organisms, always repricing, always adjusting, and that's what you want. And so even from a tribe formula, today we've got two separate funds and vehicles. One is closed loop and another one is more similar to a hedge fund. Why? Because in crypto, it runs more like the public markets. So startups used to sell equity to investors and products to users, two separate markets when you look at it in a traditional way. Today, you can issue a token that combines both. Investors and customers can become a part of the same feedback loop. And that ends up being probably the most incredible, powerful journey in the world that you've ever seen, because that's how it was intended to be, which is how could you have your customers be your shareholders? And then we regulated them out. So now when you think about it in an on-chain world, when you think about global liquidity, the math only works if the token is grounded in some sort of real utility or demand. And I think that's where I spend my time thinking about, okay, what are the frameworks again to convert how that signal can convert into value with user activity, network growth, token velocity, sustainable economics for customers and holders. If those vectors align, then a token is just another form of product market fit. On the Kraken side, we care a lot about that, right? Because we list these types of tokens. And so we help tokens reach price discovery in a trusted, compliant way. As a platform, we're preparing a world for where everything, equities, bonds, data streams, utility systems, commodities, et cetera, will eventually have a token representation as well. So I think what that means for the capital markets is actually quite profound. I know your question was pretty simple, but the way I think about it is capital formation today happens pretty episodically, private rounds, IPO markets, secondary markets. In a tokenized world, that is continuous. It happens all the time. And that's the boundary between a company, a customer, and the way in which capital blurs.
Yeah, I like the way you think in frameworks. And like if a startup now starts out, and we have many founders in this room, and today we talked with many founders of our portfolio, and also in the future, of course, in our next fund, we will have also again early stage investments where at some point there will be the exit through a liquid token. You as Kraken, what kind of playbook do you give to early stage founders, or what would you recommend early stage founders to look out for when they're starting out? So again, from the Kraken perspective, what is the ideal token and token economics or playbook you want to see of those tokens you then list on Kraken, for example?
There's no hard and fast rule, and this has evolved. And I think, look, there's no advice that I could say that is better versus the other. It's just that things change very quickly. And so I think maybe the right way to frame this again is that the token is not your product. That's where I think most companies have made the mistake in the past. They focus on just the token and not what they're building. The token is just your economic system. And a lot of protocols or companies, when they have that framework, they end up becoming much more successful. So what does that mean? So the playbook for early founders isn't about when do I issue? It's what problem does the token solve that equity can't? And so when we analyze hundreds of early networks or we work with them, we're mapping how usage growth and ownership flow, and the best token designs all share those common principles. So the economic loop comes before the token. So before you mint anything, you understand the loop. Who creates value, who consumes it, who amplifies it. If you can't describe that loop early, then you're not ready for a token, in my opinion. It doesn't mean you can't. It just means that that's how we think through it. Tokens should accelerate through existing network effects, not invent them. And I think a lot of people try to do the opposite. Again, tokenomics is basically a monetary policy plus market design. So you have to be really smart about how you do it. So the ideal tokenomics isn't about inflation schedules or yield. It's about aligning incentives. Otherwise, they fail very quickly. And that you see that all the time, which is why some tokens just don't get listed and they hit a flat line, or they're not able to grow, not necessarily the token price, but they're not even able to grow their network. And so what behaviors do I want to be able to maximize? What risk do I want to price in as a protocol founder? If you get that right, then the rest ends up actually becoming algebra. So you're effectively designing a microeconomy, one that balances supply, velocity, demand intensity, and trust. So the way I think about it is you've got utility times scarcity times friction, and then that will ideally be value retention.
Well, thanks so much. I think the phrase "token is not your product" I think is one of the best sentences I heard in this regard, and definitely an advice every startup should take. And we're a little over time already, but I'm just looking into the room. Is there one last question by the audience, or two? Yeah, okay. No, then maybe Arjun, how's your time? Do you still have time for two questions?
Sure.
Thanks.
Hi, Arjun. This is Sethi here from MasterCard. Thank you very much for taking the time to talk to us. Very interesting. Actually, we've been looking at your platform for a while, and we've been working with Kraken also for a while. From my point of view, I would like to better understand, also given that we're very close to a lot of other exchanges, where do you see...
You also are now acquiring Zero Hash, so congratulations.
I'm not able to comment on that, unfortunately, but I'm happy to pick up the conversation once we have finalized that. My question was actually, where do you see Kraken going over the next 5 years in terms of, because you talked a lot about product market fit, in terms of products that you're launching, because in the moment you focus mainly on trading, and I suppose this will remain the core of it, but you also mentioned that you're getting, or you have banking licenses in the UK, the EU, EA, US. Is there, like, what would be the additional products that you're looking for to add to your platform and in the next 5 years?
I feel like I'm in an MBA class. What are you going to do, Arjun, in 5 years? Look, I think we've kind of laid out the way in which we think financial services are going to change over time. So let's just break down the basics of what you see in fintech. In fintech, you send and receive a payment. You store either a store of value or an asset. You may or may not want to be able to get yield for that. You want to be able to have access to it as quickly as possible if you want to use it. You want to be able to get credit for it. Like, the list goes on in the way in which you think of it. So first off, thank you. And I think partners like MasterCard probably matter more than people think. And so I was giving you a compliment about Zero Hash, and given I'm a shareholder,
very much appreciate.
Thank you for that.
Thank you.
Yeah. So I think the future isn't about banking versus networks. Again, I think it goes back to interoperability, and I think Kraken sits at that spot where you have to be interoperable. So yes, trading has been our beachhead. That's how we've started, right? It's like a high frequency use case of what people do. But our roadmap has always been, we are a internet global capital market. We're a full financial platform built on top of the crypto rails, and we want to give people access to that. So the 3 layers I think of is that you have products for consumer, you've got products for institutional, and then you've got products for infrastructure, all right, in the way in which you think about it. So what is stablecoin? Stablecoin, you've got on-chain settlement for cross-border, you've got treasury ops where regulations permit. You can do merchant acceptance, card programs with folks like you guys, spend, rewards, real-time crypto, fiat conversion, disclosures, etc. Great. You can do B2B payouts. Then you've got tokenization and capital markets, on-chain treasuries, money market exposure, access through compliant wrappers. Then you've got tokenized private markets, cap tables, funds. When I say funds, actual cap formation through on-chain activities. Then you can do revenue shares. There's what I call lifecycle tooling for that. So issuance, compliance screens, secondary liquidity. Companies can operate on-chain or off-chain, not just raise capital. Again, we have listings and launch support for a lot of what we do, but that doesn't have to be for a protocol. That could be for a company. So what does that mean? Then you need diligence, you need integrity controls, you need post-listing analytics, similar to how a traditional exchange works. But then you also, as a company, do custody and treasury on behalf of your customers of who they are, regardless if they're a company or a protocol. So you have to segregate the assets. You have to be policy-driven. You're going to have MPC plus offline controls for corporates and asset managers. Then you have prime and liquidity networks. You have to build for that. You have to build for collateral and credit primitives. Everything I said, we have to build. And then everything I said, someone's going to compete against us and nip at the margins. So we have to figure out what we want to be really great at, because I think of it similar to the internet, which is a lot of companies had to build everything. And then wave 2 was that there was lots of companies competing against the everything exchange or the everything store or the anything store. And so when I think 5 years out, the question ends up being, what do we simplify and build for a very specific use case, or are we going to be a generic store? And it's actually something that I think about all the time. I'm not sure I want to be a generic store or a Walmart. What do we want to mean for our customers? And so does that mean we become more like JP Morgan over time, or do we become more like Apple over time? And I actually don't have the answer to that question. Because today we have to build everything for everyone because nobody else is.
There was one more question. Maybe you can just introduce yourself, what you're doing.
Yeah. Hi. Yeah. My name is Casper. I'm the co-founder of Blue. It's an on-chain neobank in Latin America. We're actually live in Mexico. Thank you for taking the time. So my question is about acquisition and distribution, mostly on the consumer side, really. Like, how do you think about acquisition? What role does it play? I'm sure it evolves, like having as many clients as you do. I'm sure it's different than in the early days, but just, yeah, want to pick your brain, understand how you think about acquisition. So yeah, thank you.
When you say acquisition, I mean acquiring a customer or acquiring companies?
Yeah, customers.
Okay. So like from day one, in crypto, you're global. And so I go back to basics. Like, so you built a neobank specifically for an intent use case. Actually, if you don't mind me asking a question, like what is the use case of why people use your neobank over others?
Yeah, it's to access formal credit history, and they can build credit history because we have a credit card, and we can give them a credit card because we use the Android data to build the credit score, and then we're able to give them a physical and a digital MasterCard credit card.
Got it. So you're basically giving access to capital, and you've got a different underwriting model. Is that fair?
Yeah.
Okay. So look, I think the hardest thing to build for customers worldwide is that they are worldwide. And so you kind of have to build what I call distribution architecture for financial access as like your core. That's how we think at Kraken, actually. So for example, we've got products that work only in Asia or like Hong Kong, Singapore, but other products won't work there. So, today we've got 12 million people roughly that use our products daily in some cases. In over 190 countries. It's super painful. So translation, localization. I think what matters more is that is how that population segments by use case and sophistication. And the way you think about it, it looks more like a portfolio than a funnel, but you start off in the beginning like a funnel. So the core use case is, okay, you got everyday people. And so what do they care about? So they're entering crypto for the first time in some cases, or tokenized assets. So they just want to buy, they want to sell, they want to have earn stake, they want to have some sort of yield on that asset, but you got to make it super simple for them. And then they want to be able to transfer that. Sometimes those early users might want to transfer that into a wallet that is not yours. And so you need to be able to help and enable that as well. So those people need your trust, your simplicity, and your predictability. In some cases, to say that you're regulated. So we serve that through a variety of our main apps. We've got two. One is called Kraken Consumer. The other one is called Crack. And that ends up being through also partnerships with card issuers, other neobanks, payment networks, to be able to bring people into that experience. The other one is what I call active traders and earners. And they actually look and feel the same no matter where you are on Earth. There's this really good book, if anyone wants to read, it's called The Righteous Mind. And what it talks about is people that are educated or have certain purchasing power parity, no matter where they are located in the global world, they have the same frameworks, they've got the same cultural values, and they think the same way around their wealth. And so when I think about active traders and earners, I actually think of them similarly all over the world, which is they interact daily, they cross asset trade, they have yield strategies. Some people call them degens. They stake, they think about perpetuals wherever they're permitted. Look, I'm thinking about one individual right now. He came from Brazil, and we moved from Brazil to the United States, worked his way there. He started with a couple $100,000 and eventually turning his book every single day because he thinks about speed, tools, UI, UX. He thinks about API integrations. Just one person, by the way. He's using a lot of AI to be able to think about how he interacts with modernizing the matching engine and to UX to meet the expectation of a trader. Today, or actually 6 weeks ago, his net worth was almost $700 million, just a lot. And then 2 weeks ago, his net worth was $150 million, and then his net worth went down to 2. I thought this guy was going to just be like severely depressed. When I talked to him, he said, I started with zero, I made it to becoming almost a billionaire, and I'm going to do it again. And he just kept trading. So the reason I say that story is like that's a different segmentation of people. Now let me move on to the next, which is institutions and corporate clients. Hedge funds, fintechs, treasuries, banking, and crypto. Those are different. So you can think of them as enterprise. And so the strategy for every single one of these core segments is different, right? One is direct, one is partner, one is earned. And what I mean by earned, it's education, transparency, proof of reserves, open APIs, et cetera. So when I think about like acquiring customers, I really think of it, what is the segment? what is the funnel, what is the intent of what they want, and then what is the best experience just for them, rather than putting them into a Frankenstein product that is anything for everyone. I just don't think that works, which is why you see Kraken, it's a collection and a family of products. It's not just one.
Well, Arjun, thanks a lot for your time. I know we went over time in this case, but it was definitely worth it. I hope also for you. I hope to see you soon again in person. And thanks for sharing all your experience with our investors here and founders. And also, by the way, some Kaufman Fellows in this room and listening in via the stream. So probably some familiar faces in the room here for you too.